Hey, what's going on, everybody? Welcome back to another episode of Wealth Defense Radio, the podcast. I am your host, Josh Inahosa, and I am an independent advisor representative for SWAN DFW, which stands for Sleep Well at Night, Dallas, Fort Worth, and I am here with the man who never has a bad hair day. It is Hector Inahosa.
Good morning.
Hector is a certified financial planner, which is the top mark in our industry. Hector started SWAN DFW a little over 11 years ago now.
Yeah, that's right.
Has been in the industry for longer than even he can remember.
1993.
Oh, he can remember.
That's right.
So why don't you explain to the people who are watching or listening on YouTube, Facebook, or Spotify, or wherever else you find the podcast, what we're talking about today.
Is this the end of the world? Should I sell everything? Should I pack everything and go live in an African country by the Nile River? We'll answer that question today, maybe.
Maybe.
Actually, it's a review of what's the market doing and how is this different than what we've had before.
Yeah, I think there's a lot of pretty crazy news, and we've been getting a lot of questions lately. Mm-hmm. So this maybe is like a public service announcement.
That's it. We're all about public service announcements.
If you will.
Yeah, and the market's been kind of wild over the last couple, 3 months, and we've had several conversations with clients and potential clients about what they should do with money. And we go back when things like this happen and everybody says, well, this is it. This is the worst it's ever been. It's never been worse. And I should just sell everything and, And so we want to just kind of put this, what's going on today, in context. Past performance is no promise of, or guarantee of future thing. But we can go back in history and look at some things and try to remember how we thought about things then. And hopefully that will calm people down. So.
Yeah.
Okay.
There's been a lot of news lately, specifically about tariffs, and that seems to have the market in flux.
Yes,
we'll say.
Yeah. And that's and more than just, or maybe not more, but as much as tariffs is the fact that it's they're on one day and off the next, and then some countries get, and then the others don't, and then some industry. Uncertainty is what this market really dislikes, because most folks, CEOs, even investors, are trying to figure and make long-term plans. And so when everything is changing right now, that presents a bit of a problem, and we're kind of in the middle of that.
So you have some data.
I do.
I think.
We hope that you take a minute and look at our YouTube, no matter how you're listening at it, so you can see what we're trying to show here. If we go back in time to 2008, that was right at the end of the Bush administration and the beginning of the Obama administration. We had what is commonly referred to as a housing bubble. And that was, we had created instruments inside the financial markets that would let people that were not really creditworthy or even financially able to qualify for normal loans, but they were selling mortgages to a lot of people. And then all of a sudden, one day, people couldn't pay for that mortgage that they should have never received. And we had a tremendous amount of homes that were going to be foreclosed on. And more importantly, we had a lot of loans on those homes that had been leveraged. And it was just a mess. And the government had to step in and bail out a lot of companies, because many thought we were on the brink, that this could collapse the whole financial market. The Merrill Lynches of the world became like Bank of America, and there was just a lot of big movement in the markets because of what was happening. And if we go back and we look at 2008, you can see that the decline was fairly significant from 2007 to 2008. But in the historic context, and we're only showing from 2025, you can see that it was really big in the moment. But when we look at it and with a bigger thing, we say, well, that was just kind of a bleep on the things. And more importantly, the people that stayed in and didn't bail, the people that stayed in and were invested, in this case, the S&P 500, they were back to level within about a year. It took a little while to get back, but it happened. And so the folks, we tried real hard to keep people in the market back then, and those that stayed in ended up, and you can see after 2009, we had a really, really nice swing up until we get to about 2020.
Yep. 2020, as most of you will remember, not a great time in Earth's history. We had a global pandemic and COVID, and as it turns out, that's very bad for the market. At least in the short term.
Very, very bad, because we were back. This was the worst. Now, this was kind of a different animal. We had never had a pandemic in the markets, and people were being told to stay home, and we had lines for people who were standing in line. I remember standing in line for a vaccine, and we were trying, and nobody knew. And I remember, we went to the doctor for COVID, and they were saying, we don't know. We just don't know. So, if there was a time in our lifetime where the world might be on the brink, that was it. And you can see that we had a fairly substantial sell-off. Mm-hmm. But it didn't last very long. You can see how quickly that bounced. That's a nice V there. And it bounced, and within about 8 or 9 months, we were back to level. And it was the people that panicked at the bottom and never got back in that got crushed.
Yeah, so we have a Warren Buffett quote here that says, "Be fearful when others are greedy, and greedy when others are fearful."
Yeah.
That's something we try to invest by. Warren Buffett, obviously pretty successful.
Not a bad guy to follow. And that was the thing, is people panic, and that's when we should be buying. And certainly when we make a lot of money and we tell people we should be selling, most people don't want to sell because we think it's going to go over. It goes back to that Michael Douglas line, greed and fear are the only thing that drive the market. And when we're making money, nobody wants to sell anything. Anyway, so the market corrects substantially because of the pandemic, but very quickly people started getting good, or they stopped getting worse, and things got better. Vaccine was out, and the economy turned, and we had another nice run to the peak of about October of 21. One of the ways we got out of that big slump in 2020 is, if you remember, we were getting checks in the mail. Like, all of a sudden, a check would be there, and it was made out to everybody in the family. And the government was pouring a bunch of money into the economy so that we could, one, survive, and two, make sure that we hopefully keep buying things and keep moving forward. And that was one of the reasons that the market went up, is many people took that money and didn't spend it, but invested it. So when you have more buyers and you have sellers, you have the market that goes up.
Yep.
Everybody loved it. Everything was good. And then we got some bad news.
Yeah, when you flood the market with more money, inflation happens.
Yeah.
And then at its peak, June of 2022, inflation got all the way to 9%.
Yeah, and I remember that was going to be when the world ended, because all of a sudden the pictures of the folks in Germany after World War II taking wheelbarrows of money to go buy bread because the hyperinflation was going to come in, and this certainly was the end of the world, and everybody should sell everything, and we did. We had a tough year, and we had a fairly significant sell-off in the market. And then it stopped, and then inflation got back under control, and then we've had a really nice run from September of 22 till November of 2024, and it's in the last few months that all of a sudden we've had the beginnings of the tariff talks and stuff like that. So want to put that in historical perspective and say, remember how you felt in those moments, and if you're, I was talking to a good friend of mine this morning. If you don't remember, that's because you weren't paying attention. But these things were happening, and there was people panicking. Maybe you weren't. And so today, again, this isn't the all clear, and again, past performance is no guarantee of future performance. But historically, this seems to be a time not to panic. panic is not a good investment philosophy.
Yeah. I think another bad investment philosophy is selling at the dips.
Yeah.
A real basic economic principle we've all heard,
Yeah.
or if you haven't heard it, you're about to hear it now, is buy low and sell high.
Oh, that's a good idea.
Yeah, because that's the way that you make money. If if we panic and freak out at the dip, sell out, wait for everything to bounce back, and then buy high, that's a tremendous way to lose.
Yeah, very efficient way to lose a lot of money.
Yeah.
And the problem with the market is that when you lose a bunch of money, it doesn't even send you a thank you card.
Yeah.
it just moves on like you're not even important or something. And so, yeah, again, not the all clear button, but historically, we've tackled things like this, and this is, if it is, and I don't think it is, the word recession has popped up. This is a man-made recession because our economy is doing well. Employment is good. Inflation was down. We reported it as we record this on March 12th. Inflation number was good. Companies are making money. Earnings are good. So structurally, we're okay. So don't panic. Don't sell. And if you're not in, maybe start going and buying some stuff that's on sale.
Yeah. We use that term a lot here. When the market dips, things are on sale. Everybody loves a sale. You go to Walmart, you see things on sale, you're going to be attracted to buying the things that are on sale. Same thing that's happening in the market here.
Yeah.
Fundamentally, these companies haven't changed, like Nvidia or Apple or any of the
Amazon,
other ones. They're all the same company that they were a week ago.
Yeah.
But the stock price has fallen.
Yeah.
So,
and that's in no fault of them. That's just the way people are thinking about it. So don't panic if you haven't got out. People say, well, why didn't you get out 4 months ago? Well, yeah, if I could go back in time, but I still think, again, structurally, I think the economy's in good shape. So take a breath. Don't watch 24-hour news. If you weren't aware of what happened in 2008 or 2020 or 2022, there was tremendous reasons to panic, and you were doing something way more important, maybe raising children, maybe going to work, maybe gardening or playing golf. Or go do that. You don't want all this negativity being poured into you. And I still think that American technocracy is still the greatest investment. And the world thinks that too. Tons of money comes in from foreign places because this is the place to be if you want to make a little money in the market.
Yep. So why don't you sum all that up in like a sentence or two? Bottom line. What are we taking away from today?
Yeah. Don't panic. If you got out, good for you. If you're not out, this is not the time to get out. It feels like we're reaching a bottom, that capitulation. That's when everybody kind of throws in all of their, happened a few days ago. And if you're not in, maybe it's a good time to start sticking your toe in the water and buying some quality companies that will, in the long run, make you lots and lots of money.
Yep. So if you would like to talk to us about any things you heard or getting in the market or settling you down or
just want to wish us a good day, we can do that.
Yeah, we have a couple different ways that you can do that. First way is via phone number. That's 888-SWAN-DFW. That's 888-792-6339. And the second way is via email address, and that is info@swandfw.net. Those will be in the description wherever it is you are watching or listening.
Yeah.
And thank you guys for listening.
Yeah, and give us a like and forward this to a friend, especially a friend who might be panicking, and take a breath. It's going to be okay. Thanks for listening, and God bless.
Catch you on the next one. The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.